Okay, let's unpack this. I want you to just close your eyes for a second. Imagine you are holding a physical letter in your hand.
Okay.
You've just walked to the mailbox, you've pulled it out, and you've got this envelope. It's official.
Hmm.
Maybe it's that thick, expensive paper, with the watermark.
Hmm.
It has the address, maybe a corporate logo.
Right. It sets the stage.
Exactly. It sets the boundaries of what you're looking at. It tells you instantly, hey, this is a legal notice or this is a wedding invitation. That envelope is crucial.
All right.
But then you open it up, you slice it open.
Yeah.
And inside, that
Oh,
is
yeah.
where the actual information lives.
Yeah.
That's the content. That is what you actually care about.
That is a very apt, very visceral analogy to start us off today. I like that a lot. It frames the whole conversation perfectly.
I thought so. Because today we are diving into the absolute weeds of SAP sales and distribution FED, and we're going to use that exact mental image to anchor us for this deep dive. The sales document type, the header, the OR, the QT, that is your legal envelope. But the star of today's deep dive, it's the contents. It is the item category.
Precisely. And if we connect this to the bigger picture for everyone listening out there, whether you're a junior analyst just starting out or a seasoned solution architect, while the header sets the tone for the entire transaction, the item category is the engine room for every single line on that order. It is the operational behavior of the material itself.
And we aren't just talking about a label here, right? I think that's a huge misconception people have. They see a 4-letter code on the screen and think it's just a tag, just a grouping thing. But we are talking about absolute control.
Absolute control, yes. It's not a tag at all. It's a set of hard instructions. This category determines pricing, billing, delivery logic, inventory management, credit updates. Essentially, the item category dictates the life and death of a line item in the SAP system. It tells the system exactly how to treat the product you just typed in. Does it ship? Does it bill? Does it cost money? All of that logic lives right here.
Which means the stakes seem pretty high for something that honestly just sounds like a simple drop-down menu in a configuration screen.
Oh, the stakes are incredibly high. And this is actually what fascinates me about this topic. For a functional consultant mastering the item category, specifically transaction VOV7, which is where we define these things, it's like having a superpower. It allows you to completely manipulate how the system handles a product without needing to call an ABA developer.
Right, you don't need custom code.
Exactly. You don't need ABAP code to change the destiny of a product. You just need to understand these specific checkboxes.
With great power comes great responsibility, right?
Uh-huh.
I read in this source material about a horror story potential here. Is it really that dramatic? Like, can it actually break things that badly?
Oh, absolutely. It's not an exaggeration at all to say that a single wrong checkbox in this transaction can stop a truck at the gate.
Literally stop a truck. Like 18 wheels, engine idling, driver yelling in the yard.
Literally. Imagine a truck driver waiting at the loading dock. The warehouse team has picked the goods, they've packed them. They go to the terminal to post goods issue to generate the delivery note and let the truck leave. But the system throws a hard error. Why? Because the item category was configured incorrectly regarding the schedule line.
Wow.
So the truck just sits there, the customer is screaming for their parts, the logistics manager is calling you at 3 a.m., or perhaps even worse from a finance perspective, you could halt a $1 million invoice.
Wait, how does that happen? How do you halt an invoice from a logistics screen?
If the billing relevance field is set incorrectly, the goods leave the building, the customer gets their product, they're perfectly happy, but the system never puts the item on the billing due list. You essentially just gave the product away for free because the system doesn't know it needs to send a bill.
Yikes. Okay, so the mission today is very clear for us. We are going to move beyond the basic textbook definitions of SD. We want to get into the architectural logic of transaction VOV7 and payable TVAP. We aren't just reading field names off a screen. We're looking for the ripple effects of configuration.
Exactly. We need to see how a decision in one little field impacts the warehouse, the accounting department, and ultimately the customer experience. We're going to look at the matrix, basically.
So let's dive right in. Before we even get to the control panel, before we start checking boxes in VOV7, we have to figure out how the system even knows which item category to pick. It's not random, right?
No, it's highly logical, but it can be really tricky to trace. This is the logic of determination. Before you can tweak the controls, you have to ensure the system is picking the category you actually want it to pick.
Right. So if I'm a user entering a sales order, how does SAP decide, okay, this line is a standard item versus this line is a service?
It uses a specific 4-key combination. You can see this setup in transaction VOV4. Think of it like a combination lock on a safe. All 4 tumblers have to align perfectly to unlock the correct item category. If one number is off, the safe doesn't open, or worse, it opens the wrong door completely.
Okay, walk us through the combination tumblers. Key number 1.
Key number 1 is the sales document type. Are we in a standard order, an OR? Are we in a quotation, a QT, maybe a return, an RE? The context of the envelope matters first and foremost.
That makes total sense. You treat a product differently in a return than you do in a sale. In a sale, I'm giving it to you. In a return, I'm taking it back. The physical movements and the financials are totally different.
Exactly right. So the very first thing the system asks is, what kind of document am I sitting in?
Okay, key number 2.
This is the big one, the item category group. This is found in the material master, specifically in the sales org2 view. This is where you tell the system what the material is fundamentally at its core.
So this is permanently attached to the product itself.
Right. Is it a standard physical product? That's norm. Is it a service? That's DION. Is it a third-party dropship item? That's BAMS. This is the DNA of the material.
Okay, so key 1 is what kind of document is this, and key 2 is what kind of stuff is this. What's the key number 3?
Item usage. This one is really interesting because it's optional, but it overrides things programmatically when it's used.
Give us an example of usage in the real world.
The most common one is free goods. Let's say you have a sales promotion, buy 10, get 1 free. You enter the line for 10 items. The system runs a background calculation using the condition technique and realizes, hey, this customer qualifies for a free one. So it automatically adds a new line to the order for that 1 free item.
Right.
But that free item is the exact same physical product as the ones they are paying for. It has the same material master record. So how does the system know to treat this specific line as free while the other line costs money?
Because if it just looks at the material master, it just sees norm. It just sees a standard item.
Exactly. So the free goods determination logic actually injects a usage code, the code is free E, into that specific line. Now, the combination lock has dynamically changed. It sees standard order plus standard material plus usage free. And that combination points to a totally different item category, usually TAN, which is the standard free of charge category.
That is so clever. It's like a context modifier on the fly.
It really is. Another great example is text T. If you just type a description into a line without putting in a material number, the system assigns the usage text T, which points to a text-only item category.
Got it. And the 4th key for the lock.
Higher level item category. This is also optional, and it's primarily used for bills of materials or BOMs.
The bundles.
Right. Imagine you are selling a gamer's PC bundle. The bundle itself is the main item. Inside that bundle, you have a monitor, a CPU, and a mouse. Now, normally a mouse is a standard product. Norm. If you sold it separately, it would be a standard item category like TAN. But here, the mouse is inside the bundle. It is a child of the parent item. So the system looks at the mouse and says, okay, document is order, material group is norm. But wait, I have a higher level item category sitting above me, which is the bundle. That 4th key tells the system to treat the mouse not as a standalone sale, but as a component. It might assign it a category that suppresses pricing completely because the price is rolled up on the bundle level.
So to summarize, document type plus item group plus usage plus higher level category equals the item category the system spits out.
Correct. And here is a massive pro tip for anyone debugging this, because I see this all the time. A consultant goes in, they change the settings in VOV7, maybe they turn on pricing, but then they go back to the sales order and absolutely nothing happens.
Right.
They tear their hair out thinking the configuration is broken or transported wrong. They are staring at the checkbox going, I checked it. Why isn't it working?
And let me guess, it's not the checkbox's fault.
Usually not. The problem is usually determination. The system didn't pick the item category they thought it would. So before you ever blame the checkbox, go to the Sales Document Item tab in the order. Actually look at the code that was determined. You might expect TAN for standard, but maybe the system determined TAN for free goods because of some weird master data error, or maybe TAS because someone secretly changed the material master to a third-party group.
That is a golden nugget right there. Always check the tape, folks. Verify the determination first before you go digging into the config.
Always. It saves hours of troubleshooting.
Okay, so we've got our item category properly determined.
Yeah.
We are now stepping inside the engine room itself, transaction VOV7. And honestly, there are a lot of fields in here. It looks like the cockpit of a 747 when you first open it.
It can be overwhelming, but we can break it down into very logical blocks. The first block we need to look at is the business data section. This controls the financials and the commercial status of the item.
And one of the very first things that pops out in that section is something called the completion rule. This sounds like it answers the basic question, when are we done with this thing?
Exactly. It defines when a line item is officially considered closed in a reference document. And this is absolutely vital for keeping your open order lists clean and accurate.
Give us a business scenario where this goes wrong.
Let's look at the quotation document, the QT. Imagine you send a quote to a customer for 10 premium laptops. Now the customer comes back a week later and says, great, I'll take 5 of them right now.
Okay, so they order 5 against the quote. I've still got 5 left open on that quote for later.
If you have your configuration right, yes. But if your completion rule in VOV7 is set to A, the system says item is completed with the first reference.
Wait, so I order 1 laptop and the system closes the whole quote for all 10?
Correct. The system thinks you referenced this line at all, so we are done here. Close it out. That is terrible for business because you just lost the opportunity to sell the other 9 easily. The sales rep goes back into the system later to create another order for the remaining laptops, and the system throws an error saying there is no open quantity. The rep has to create a whole new quote from scratch. It's unnecessary friction.
That sounds incredibly frustrating for the sales team. So what should that rule be set to?
For quotations, you almost always want completion rule B. This means the item is completed only after the full quantity is referenced. So in your example, if they order 5, the quote stays open for the remaining 5. It tracks the balance perfectly.
See, that's logic that affects the sales team's daily life directly. If that's wrong, they're going to be calling the IT desk saying, why can't I sell the rest of these laptops?
Exactly. It's a major business process decision hidden in a tiny drop-down menu.
Let's move to what might be the single most important field for the finance team, billing relevance.
This is the heavy hitter. This field alone dictates the entire order-to-cash cycle. It tells the system if an item is billed at all and exactly how it is billed.
And there are a few different flavors here. Let's break down the big ones.
The standard for a physical stock item, like that laptop we mentioned, is A. This stands for delivery related.
So simply put, no delivery, no bill.
Precisely. You pick the item, you pack it, you post goods issue, then and only then does the system put that item on the billing due list. It ensures you never accidentally bill a customer for something that hasn't actually left your building. It aligns revenue recognition with the physical transfer of ownership.
That makes perfect sense for physical stuff. But what if I'm selling a service, like a consulting hour or an installation fee? I can't put a consulting hour in a cardboard box and ship it on a pallet.
And that is the classic trap. Services which use standard item category TAD use billing relevance B. This stands for order related. Since there is no physical delivery document, we just bill based on the quantity on the sales order itself.
So what happens if a junior consultant accidentally leaves a service item set to A? Maybe they copied a standard item category to create a custom service category and just forgot to change this one field.
I have seen this happen on live projects. The client calls in a panic and says, we sold $50,000 worth of consulting last month, but it's not showing up on the billing list. We physically cannot invoice the customer. They go to transaction VF04, the billing due list, and it's totally empty.
Because the system is just sitting there waiting for a delivery truck that's never going to arrive.
Exactly. The system is waiting for a PGI that is logically impossible to perform. So the money is just stuck in limbo. You have to change it to B, or the cash flow simply stops.
That is a massive gotcha. Now, there's another one here for third-party processes, right? Where you don't ship it ourselves, but a vendor ships it directly to the customer.
Yes, the TAS process. This is tricky. You often use billing relevance F. This is order related, but with a really important twist status according to invoice quantity.
Translate that for us into plain English.
It means we don't bill our customer until our vendor has officially billed us.
So it protects the company margin. We wait until we know our exact cost before we recognize the revenue.
Correct. It ensures that the accounts match up perfectly. Because if you billed the customer immediately based on the order, but the vendor sent an invoice for a slightly higher amount 2 weeks later due to freight or something, your margin analysis would be a complete mess. F keeps everything synchronized. The trigger isn't the sales order and it isn't the delivery. The trigger is the vendor invoice receipt, the MRO transaction in the purchasing module.
It's amazing how these little letters A, B, F control the entire flow of corporate money. Speaking of money, let's talk about pricing and statistical values.
Right. So usually pricing is just set to X. Standard pricing, it's active, the system calculates the price, adds it to the total, and everyone is happy.
But there are exceptions, of course.
The big one is free goods again, the TAN category. Here the pricing indicator is said to be. This triggers a 100% discount automatically. The gross price is still there on the screen, but the condition records apply the discount so the customer pays zero.
What happens if you just leave the pricing field completely blank?
If you leave it blank, no pricing logic triggers at all. The pricing procedure simply doesn't run for that specific line item.
Which honestly sounds fine for a free item, right? If it's free, why do I need the pricing engine to run?
You might think so, but you have to be really careful there. Even if the customer pays zero, you might still desperately want to track the internal cost of that item or the taxes associated with it for reporting. If pricing is blank, the whole pricing procedure is dead. You get no VPRS, which is the cost condition. You get no tax lines. You get absolutely no financial data. So usually you want pricing active, just discounted to zero rather than turned off completely.
That leads really nicely into statistical value. This is about what you called phantom values, isn't it?
Yeah, that's a great way to put it. A statistical value, which is marked with an X, means the system calculates the value. It knows the item is worth $100, but it does not add it to the header total of the order. It's calculated for your eyes only.
When do we actually use that?
The classic example is a bill of materials. Let's go back to that computer package. You have a header item gamer PC bundle. Price is $2,000. Then you have the components underneath it, monitor, CPU, keyboard.
Right.
If your pricing strategy is ERLA, meaning the pricing is done at the header level, the customer just pays $2,000 for the bundle. They don't pay for the components individually.
But the components still have costs associated with them. And they have individual selling prices if you were to buy them separately.
Exactly. So the components are set to statistical in VOV7. We track their cost internally. We might even print their individual retail prices on the invoice document so the customer sees the great value they are getting, but those numbers do not add to the final bill. If they weren't statistical, the bill would be $2,000 for the header, plus $500 for the monitor, plus $800 for the CPU. The customer would be massively double billed.
So statistical value prevents the double dip while keeping all the rich data alive in the background.
Precisely. It allows for complex pricing structures without confusing the final invoice or overcharging.
Okay, we've covered the determination and the business data block. But now I want to get to what you call the big three in the notes. You mentioned that these three specific checkboxes dictate 90% of the functional behavior of a line item.
This is the core of the expert deep dive today. If you forget everything else from this entire discussion, remember these three fields. This is what truly separates the junior help desk guys from the senior architects.
Let's hit number one, schedule line allowed.
I call this the gateway to logistics.
Why the gateway?
Because in SAPSD, if you do not have a schedule line, you absolutely cannot have a delivery, period. The schedule line is the literal bridge between the sales order and the logistics execution module.
No schedule line, no shipping.
Right. The logic is beautifully simple. Check the box, and the item can generate schedule lines. Uncheck it, and it can't.
So for a service like our consulting hour, this is obviously unchecked.
Correct. Item category tab has this unchecked by default. You don't deliver a consulting hour. But here's where it gets really interesting in practice. Imagine you have a non-stock material. Maybe it's a glossy brochure or a promotional t-shirt that you don't track in inventory quantity. It's just bulk stuff sitting in the warehouse.
Okay, so it's not really stock in the sense that we aren't counting it during this strict annual financial audit.
But you still need to put it on a physical truck, right? You still need a warehouse worker to pick it and pack it in a box.
Yes, physically it has to move from point A to point B.
Then you must check schedule line allowed. Even if you aren't tracking the inventory numbers in a complex way, if you need a delivery note, you need a schedule line. I have seen so many people create custom categories for marketing material, uncheck this box because they think, oh, it's not stock, I don't need a schedule, and then the warehouse physically can't ship it.
That connects right back to the stopping the truck scenario from the beginning.
Oh, exactly. It effectively strands the item inside the sales order. It's stuck in administrative limbo forever.
Okay, big three, number two, credit active. This feels like the risk manager of the group.
It is. This checkbox determines if the financial value of the line item updates the customer's credit exposure in the FI module.
The logic seems pretty straightforward for a standard product. I sell you a laptop, your available credit limit goes down.
Right. Standard item TAN has this checked. But where consultants get completely trapped is once again with services.
Again with the services. Why do services always trip us up in SD?
Because we tend to think of services as soft items, intangibles. Imagine you are selling an extended warranty for that laptop. It costs $500. It's a service item. Often people copy the standard service category and just forget to check credit active.
But does a service really carry credit risk?
Of course it does. If I sell you a $500 warranty and you don't pay me, I have lost money. The company has credit risk. Just because it's intangible doesn't mean it's free. If you don't check this box, you are creating a massive loophole in your corporate credit management. A customer could theoretically buy unlimited warranties and never hit their credit limit block.
That is a huge blind spot for a business. What about returns? Do they affect credit?
Returns, the RN category, also have this checked, but for the exact opposite reason. A return obviously has a negative financial value. So when you check credit active on a return, it actually reduces the customer's credit exposure. It frees up their credit line because they are sending valuable goods back to us.
So active just means do the math, whether it's adding or subtracting from the limit.
Exactly. It just tells the system this line matters to the credit manager. Pay attention to it.
All right, rounding out the big three. Determine cost. The margin watcher.
This one is absolutely vital for profitability analysis, or COPA. When you check determine cost, you are telling the system, go to the material master, look at the accounting view, and grab the cost price logic, usually the VPRS condition.
So we can clearly see margin equals price minus cost.
Simple math, yes. But let's look at the free goods scenario again, the TANN category.
Sure.
The price to the customer is zero. It's a free sample, right? So many consultants think, well, there's no revenue, so maybe I don't need to determine cost. It's just a giveaway. And they uncheck it to save system performance or just out of habit.
What is the business consequence of doing that?
The consequence is that your profitability analysis reporting shows $0 in revenue and $0 in cost. It looks like the transaction never even happened.
But it did happen.
Yeah.
You gave away a physical product that cost the company money to manufacture or buy.
Exactly. You incurred a real marketing loss. You need to see that in the financials. The CFO needs to know that this buy 10, get 1 free marketing campaign cost the company $50,000 in inventory this quarter. If you uncheck determine cost, you're actively hiding that loss from the finance team. You must check it so that even if revenue is zero, the true cost is captured and posted.
That is a critical distinction. It's not just about what the customer sees on their invoice, it's about what the business knows about its own operation.
Precisely. It's about fundamental truth in reporting.
Okay, we've handled the big three. Now let's look at the general control section of VOV7. This seems to handle the physical behaviors and some workflow stuff.
Yes. There are some really neat automated features here. For instance, automatic batch determination.
This is a big deal for pharma, right?
Huge. If you are in pharmaceuticals or chemicals or food, you likely use FIO first expiry first out. You can't just let the warehouse pick any box off the shelf. You need them to pick the one expiring soonest.
Right. You can't ship the aspirin that expires next week if you have stuff that expires next year sitting in the back.
Yeah.
Reverse that. You want to ship the stuff expiring next week first so it doesn't go bad.
Exactly. You want to clear the old stock before it literally dies on the shelf. By checking this box in VOV7 the moment you enter the material in the sales order, SEB automatically hunts for the right batch based on the expiration date. You don't want the user to have to click a button manually or remember to do it. You want the system to ruthlessly enforce the safety rules.
That's smart. And on a slightly lighter note, there's rounding permitted, what you called in the notes the beer crate scenario.
This is a classic logistics problem. You sell beer bottles, but you ship them in sealed crates of 24. That's how the pallet is physically built.
So if I go in and order 25 bottles,
if rounding permitted is unchecked, the system might just let you order 25. Now the warehouse worker has to break open a perfectly sealed crate to give you one loose bottle. They will absolutely hate you. It creates a mess in the warehouse. It damages packaging. It's a nightmare.
Right.
But if you check rounding permitted and you have the master data set up correctly, the system sees 25 and says, nope, rounding up to 48. 2 full crates.
It saves the warehouse, and honestly, it probably increases your sales volume too.
It perfectly aligns the sales order with the physical reality of the packaging materials.
Now let's talk about the gatekeepers. The incompletion procedure.
Ah, yes. This is what physically stops you from saving a sales order if critical data is missing. It checks for mandatory fields. And my advice here is very simple. Do not use standard procedures blindly for custom item categories.
Why not? If it's standard, shouldn't it work?
Let's go back to our favorite example, the service item. If you use a standard product incompletion log for a service, the log will probably check for things like shipping point or gross weight.
But a service doesn't have a weight. A consulting hour weighs 0 pounds.
Exactly. So the user tries to save the order and the system screams at them, enter weight. But the weight field is grayed out on the screen because the system knows it's a service. You end up in an inescapable deadlock.
The order is blocked unnecessarily and the user is just stuck.
Right. So if you have a custom item category, always ensure you assign an incompletion procedure that matches the actual data relevant to that item. Don't ask for shipping data on a service. Don't ask for a pricing date on a free item if it's not needed.
That makes sense. That leads into partner determination. Usually we set the ship to address at the header level right. The whole order goes to one place.
Usually, yes. But what about a dropship scenario? Or a massive corporate project order where line 1 goes to the New York office and line 2 goes to the London office?
Can we actually do that in one order?
Only if you allow it in VOV7. You can assign a partner determination procedure at the item level. This opens up the ability for the user to change the ship to party for specific lines independently. If you leave this blank or standard, the item just blonely inherits the header partner and you can't change it, you're locked in.
That gives you that really granular flexibility. One last thing in the screen sequence group. This sounds purely like user interface stuff.
It is, but it confuses people all the time. This controls which tabs actually appear at the bottom of the SAP screen.
Like the shipping tab or the billing document tab.
Exactly. Standard items use group N, service items use group D. If you accidentally use D for a physical product that you actually ship, the shipping tab might completely disappear from the user's screen.
So the user literally can't see the shipping info to fill it out.
They panic. They call the help desk saying, where did the tab go? The system is broken. It's not broken. It's just the screen sequence group. Always match the UI to the business nature of the item.
Great advice. Let's shift gears to some special scenarios. We touched on BOM's bills and material earlier, but there is a specific field here called structure scope.
This controls the explosion of the B.
Explosion sounds very dramatic for an ERP system.
It just means dynamically listing out the components on the screen. Imagine that PC set again. Monitor, CPU, mouse. If structure scope is set to blank, the BOM does not explode. The warehouse just sees one line PC set. This implies the set is pre-assembled. It's already sitting in a big cardboard box on the shelf as a single unit.
Got it. One box, one pick for the warehouse worker.
But if structure scope is set to A or B, the system explodes the list visually. The warehouse now sees 3 lines, 1 monitor, 1 CPU, 1 mouse. This implies they have to go to 3 different aisles, pick the individual components, and maybe pack them together at a packing station.
So this configuration actually dictates the physical warehouse workflow, picking one pre-packed box versus picking 3 separate components.
Exactly. It aligns the sales view with the physical assembly and picking process.
And for the third-party process, the TAS we mentioned earlier, there's a troubleshooting tip here regarding the purchase requisition.
Yes. The whole point of TAS is that when I save the sales order, the system automatically creates a purchase requisition, a PR in the background, to buy the goods from a third-party vendor.
And what if that PR doesn't generate? Because I know that happens.
First thing, check schedule line allowed in VOV7. We talked about this. If the item category cannot have schedule lines, it cannot hand off the requirement to the purchasing module. It completely breaks the chain. Also, you need to check the schedule line category in VOV6, but VOV7 is the ultimate gatekeeper.
It's amazing how that one single checkbox schedule line allows ripples through everything, logistics, purchasing, everything.
It really is the backbone of the integration.
Okay, we are moving into the final stretch here. We've got listeners who are probably thinking about their own help desk tickets right now. Let's do some rapid-fire troubleshooting. What are the most common tickets that come in related to VOV7?
The most common one is definitely the field is grayed out. A user calls and says, I can't change the price, or I can't change the order quantity.
What's the very first thing you check when you hear that?
I check the item category. First, look at billing relevance. Sometimes specific billing statuses lock fields to prevent manipulation after the fact. Then check if it's a sub-item in a BOM. If the higher-level parent item controls the deal, the sub-items are often locked to keep the ratio correct. You can't just manually sell one monitor with 2 CPUs if the bundle rule is strictly 1-to-1.
And the third thing to check?
Credit active. If an item or order is blocked for credit, sometimes the system freezes the item fields until the credit manager formally releases it.
Another common ticket missing cost. We talked about this with VPRS earlier.
Right. If the profit margin is showing as 0, or the cost condition just isn't showing up on the pricing screen 9 times out of 10, determined cost is unchecked in VOV7. Or they're using an item type of B, which means text. Text items, by definition, never determine cost.
Okay, let's say a listener is hearing all this and realizes, you know what, I need a new item category. The standard ones just don't fit my client's weird non-stock sample scenario. How do they actually build one without breaking the system?
There is a golden rule for customizing in SAPSD. Copy, don't create.
Never start from scratch with a blank screen.
Never. If you click new entries, you will miss a hidden control table somewhere. SAP has deeply embedded logic. Always find the standard category that is closest to what you want and copy it.
So walk us through this non-stock sample build. Let's call the new code ZINN.
Okay, so the business requirement is it's a sample, so we don't bill the customer. But we absolutely want to track the value internally for accounting, and we need to physically ship it out of the warehouse.
Step 1.
Step 1, copy from TAN, the standard free of charge category. That's the closest standard baseline. Rename it to ZINN.
Step 2, modifying the business data.
Billing relevance, we leave it blank. We explicitly don't want to bill it. Pricing, we set to X. We want to see the value calculated. Statistical value, we set to X. We don't want to add that calculated value to the order total since the customer isn't paying for it.
Step 3, general control.
Schedule line allowed, this is the crucial one for this scenario. Set it to you? Yes, we need to ship it. If we had copied from a text item, this would be off. We need it on. Credit active, we set to 2. No. It's a free sample. There is zero credit risk.
And finally, step 4.
Assign it. Go to Transaction VOV4. Map your sales doc type plus your item group may be the norm, plus a special usage like sample to point to your new ZINN category.
And then you're done.
And then you test it. And please don't just check if the sales order saves without an error. Test the full flow. Create the order, try to create the delivery, try to do the PGI, see if it hits the billing due list, which it shouldn't, see if it hits the accounting ledger, which it should for the cost of goods sold. You have to validate the entire end-to-end chain.
That is a master class in configuration logic right there.
It's methodical. If you follow the logic step by step, the system behaves predictably.
So as we wrap up this deep dive, let's just summarize the raw power we're dealing with here. VOV7 isn't just a boring list of administrative settings.
No, definitely not. It is the engine room. It actively manages the integration between finance, logistics, and sales. It bridges the gaps between the different SAP modules.
And the ripple effect we talked about is very real.
It is very real. A seemingly small decision you make in VOV7, like checking structure scope, dictates the physical workflow for a guy in the warehouse driving a forklift. A decision on billing relevance dictates the workflow for the accounts receivable clerk sitting in a different country. You aren't just doing IT configuration, you are designing the business process architecture.
That's a really powerful way to look at it. You're an architect of the business process, not just a system admin.
That's what makes a truly good functional consultant.
So here is our final provocative thought for you, the listener. We talked extensively about the determine cost checkbox, specifically on free goods.
Yes, we did.
I want you to go into your SAP system tomorrow morning. Go to VOV7. Check your free goods category, your TAN, or whatever custom Z category you use. Is determined cost actually checked? Because if it's not, you might be hiding millions of dollars in marketing costs from your business right now. Be the hero who finds those missing costs.
That is a great challenge. Go find the truth hidden in your system.
Thanks for diving deep into the engine room with us today. This has been our deep dive on SAP item categories.
A pleasure as always.
See you next time.